Assalamualaikum warahmatullahi wabarakatuh. Our group will be presenting about the Swedish banking crisis 1990. Assalamualaikum, my name is Adriana Nabila Binti Ahmad and I will be presenting about the background of Swedish banking crisis 1990. So basically, Sweden experienced a serious crisis in the early 1990s with banks collapsing, a sharp drop in GDP, soaring public debt, and a jump in unemployment not seen since the 1930s. This crisis came after a period during which wages and prices had spiraled out of control throughout the 1970s and 1980s, rectified by frequent devaluation. A mismanaged deregulation of credit in the 1980s led to runaway lending and overheating. What began as a property and banking crisis, triggered by an interest rate hike at the start of the 1990s, then transformed into an economic and monetary crisis. However, what are the real lessons from Sweden? Who paid the price for saving the banks? So in 1992, 61 companies went bankruptcy. The subsequent crisis resulted from a highly leveraged private sector being simultaneously hit by three major exogenous events: a shift in monetary policy with an increase in pre-tax interest rates, a tax reform that increased after tax interest rates, and the ERM crisis. Combined with some overinvestment in commercial property, high real interest rate contributes to breaking the boom in real estate prices and triggering a downward price spiral, resulting in bankruptcies and massive credit losses. Other than that, between 1990 and 1993, unemployment increased from 1.7% to 8.7%. And last but not least, the final cost to Sweden ended up being less than 2% of its GDP. That's all from me. Thank you.
Now, let's take a look on the reasons of this crisis, beginning with the economic environment, which tells us that Sweden had experienced higher inflation rate compared to other countries since 1970 up to 1995. The high inflation rate results in the overvalue of the currency, which then the fixed exchange rate policy began to be questioned, as it led to relatively high nominal interest rate. Under the fiscal policy, the deregulation has caused the abolishment of the liquidity ratios in 1983, while in 1985 the interest ceiling were raised, the loan ceiling and the placement requirements for insurance companies were cancelled. In addition to that, the deregulation also has caused the credit expansion, in a sense that the bank, mortgages institutions and financial companies had to compete in the market, which is they just expanded the credit borrower to whoever wanted to apply on a new loan. Not only that, unemployment rate and the real estate sector also affected.
Hi, Assalamualaikum. My name is Zulaiqha Zainuddin. Now I'll be explaining about the effect of Swedish banking crisis. So as we can see in the slides, there are three effects. The first one is credit expansion, second one the impact on asset markets, and the third one is social cause of the crisis. So we go to the first one, which is credit expansion. So as what happened in banking crisis, it has actually increases the lending rate, and this can be proven based on the article, which has stated that the lending rate varies between 11 and 17% per year during the first half of 1980s, and it has jumped to 20% in 1986. So this as well as has opened up the new opportunities for competition over the market shares, and actually it has resulted in higher domestic interest rate compared to the international rates. So the second effect is impact on asset market. So basically, banking crisis has limited the portfolio choices, and this has makes the stock index increase rapidly. Okay, and for the household, the financial assets held by them has also rises, and this can be proved by the statistics saying that household financial asset grew from 82 to 102%. Okay, For the last one, social cause of the crisis. So as what happened in the banking crisis, now the banks need to screen every customers they have before giving out the loan and need to monitor them as well. And this has actually interrupted the production process and make the resources underutilized. And lastly, after what happened in banking crisis, banks then become poorly capitalized and they are not being able to take up new loans.
Last but not least, the solution for this crisis by the government. As the banking and currency crisis worsened, the government was forced to act in order to keep the financial system stable. First, blanket guarantee. To counter the crisis and to avoid the banks from bankruptcy, the government issued a blanket guarantee. Blanket guarantee means the bank's financial obligation was guaranteed by the state. This action was helped to calm bank depositors and avoid a so-called bank run. That was when a large number of depositors decide to withdraw their money, the banks incur much greater losses. The foreign trust in Swedish banks also can be maintained with this guarantee, which was crucial for the economic stability. Second, swift policy action. Having fully understood that a serious financial crisis was taking place, the government, parliament, and the Riksbank respond by taking decisive measures to support the financial system and, in particular, the banks that were in trouble. Depositors and counterparties' trust in the financial system was strengthened in this way at an early stage of the financial crisis. This allowed for the maintenance of trust in the crisis resolution process at a relatively low political expense.
I will continue solution for Swedish banking crisis. For political unity, the joint forces between the centre-right government and the political opposition, which is the Social Democrats, is the passage to support the financial system and avoid that the crisis become a party political issue. The political party's determination in defending the pegged exchange rate of the krona, which is the basic monetary unit of Sweden, has created this unity and persisted throughout the crisis. Then, there's also a policy measures legacy taken by two governments, which is the Social Democratic government of 1982 until 1991, which initiated the financial deregulation in the mid-1980s and introduced the policy changes. And secondly, by the centre-right government in 1991, which inheriting both the financial imbalances of the boom years and ensuing bust and emerging depression. Okay, then for full information disclosure, the Bankton or the Bank Aid Board in Swedish has strived in obtaining a clear picture of financial problems that faced by financial institutions through due diligence from the very start. It tried to seek external expertise for consulting the ailing banks, and many of them are from abroad. The ailing banks were required to give full disclosure of their financial positions to be carefully reviewed. This helped in facilitating the resolution policy and being accepted by the public. That's all from us. Thank you for watching.